Welcome back. Today we're looking at a really well-structured TSLA intraday blueprint.
Yeah, for November 24th. It's built around one key level, the 392.55 pivot point.
Okay, so let's jump right in. While the plan clearly defines the structural points, the execution details on stop placement could be better integrated with the actual analysis.
Right. The weakness I see is that the guidance for wide stops, say $1.50 to $2, it feels like a generic volatility hedge.
It's just a number.
It's just a number, and it's totally disconnected from the structural levels. Like that 392.55 line in the sand.
So you risk being stopped out without really knowing if your core thesis was even wrong.
Exactly. You're separating the why of the loss from the dollar amount.
So how do we merge them? I think the suggestion is to anchor the recommended stop distances explicitly to the established structural levels.
Yes, within each scenario. Don't keep that stop range generic.
So for example, in that bullish scenario A, instead of just a dollar range,
You would define the stop as, say, 1.50 below the pivot point. That way your risk is tied directly to the level that confirms the thesis is broken.
it becomes a structural stop, not an arbitrary one. That makes sense.
Or you could even specify placing the stop just below the prior close at 391.09 if you're playing that mean reversion gap up. It ties it to a real-world level.
Okay, so we've tightened up the internal risk. Now let's talk about external threats. The blueprint does a good job highlighting crucial market factors like a weak NASDAQ, but it treats them more like warnings than actual execution modifiers.
That's a great way to put it. It notes the macro headwinds exist, but then it doesn't translate that QQQ weakness into a practical adjustment.
Right. How should that weakness actually change my conviction or my target or my risk on either of the two scenarios? The plan doesn't say.
It's like having a weather forecast but not changing your clothes.
So the improvement is to build a conditional layer into the execution plan itself, one that ties that macro context directly to your targets or your risk profile.
You could define a specific check. For instance, if the NASDAQ is still showing weakness after the open, that aggressive bullish target of $400 in scenario A
Gets pulled back.
it gets immediately scaled back to something more conservative, like the R1 resistance at $398. It becomes an automatic rule.
And that makes the whole plan more dynamic. I like that.
Yeah.
All right, let's move to the last point. It's about the structure of conviction. The analysis uses this really powerful, effective terminology, line in the sand, bounce or die, at 383.76. But that bounce or die level needs a little more support.
Yeah, for a critical floor to earn that kind of label, you're making a big statement.
A very big one.
And the weakness is that the justification relies only on it being the S1 from the prior day's low. That's not quite enough, to call it bounce or die.
We need to give that 383.76 level a better historical defense. The fix here is just to briefly introduce one more supporting element that confirms its multi-session importance.
And it doesn't need to be a whole dissertation.
No, not at all.
Just add a single, brief phrase. Mention that it ties to a multi-day congestion zone, or maybe its proximity to a key, longer-term moving average.
Just something to add that extra layer of confidence and justify why that level is so important before the next major support down at $380.
Exactly. It validates the high-stakes language.
Okay, so to summarize, this is a very strong blueprint. To make it even better, there are 3 updates. First, anchor those stop-loss definitions directly to structural failure points.
Second, turn external factors like QQQ weakness into concrete, automatic adjustments for your profit targets.
And third, just slightly strengthen the historical defense for those high conviction levels like the 383.76 bounce or die floor.
Great points. Make those refinements and send it back in.
We look forward to seeing the next version.